Hey traders, this is a companion piece to my weekend video. So I'm just going to reiterate just a little bit here some of the things I'm thinking about using volume profile. Okay, and so things that I'm looking at here, these are the daily webs using market webs. You've got 5 untested Virgin point of controls uh, on the NQs or your NASDAQ that have just never been tested. The rate of change, especially through October, it was just through the roof on tech. Just a few stocks in tech were just driving tech to the moon and taking the entire market with it. Okay, and because they went up so fast, uh, the markets were not building value along the way up. You know, you weren't back testing, you weren't finding support areas on the way up. So these virgin point of controls represent areas that have never been back tested. Okay, so these are high volume nodes that just never got a back test. They just kept going up. Volume would come in at that price, then it would go higher, and it would never really back test to satisfy the volume profile theory. Okay, and in that case, to find true support in NQs, for a reasonable pullback in this market, we're looking at 13,000 on the NQs. Okay, so that's almost a 3,000 point drop from where we're currently at to build out solid support volume. To get to the level to where we have found value in the past. I'm not saying that's a bottom by no means if we were to sell off. I am saying a 3,000 point drop in the NQs is justified given how fast it went up in the first place. Okay, we'll leave it at that. Okay, let me move on to my next chart. Okay, some other takeaways that I want to have. Here's my quad view of the NQs. Okay, tech just got decimated Friday. So every pop was getting sold into. So basically, what we had going on into up till yesterday, buy the dippers were coming in, buying the dip. And so basically, once we got the capitulation sell off early on in the session Friday, you know, it was a major warning sign to big investors. Hey, it's time to start liquidating some of these tech positionings, holdings, because we were breaking critical support levels. And I'll go into why I'm seeing that in a minute. Okay. But my main point is on cumulative using ticks. Okay. And we pretty much stayed negative 500, around the negative 500 range all day long on the uh, NASDAQ ticks. But I do want to point out we finished the week out with the lowest reading of cumulative ticks all week long. So it was full on liquidation in tech. So I do want to point that out. We couldn't even get a reprieve bounce in your cumulative tick. So no buyers showed up to speak of Friday. Now that might all change first of the week. I do want to point this out here. It's never a good situation where we're what I think we're on an ice cliff on Mount Everest, ready to fall off or ready for the ice to break. Okay, that's the situation I've got going on here on these markets. So this is something to think about. Okay, like I said, this is a companion piece, so I want to try to keep it fairly short. So what I want to point out here, okay, this is a scan of your monthly pivots, okay, and it's looking for all the stocks on your weekly default watch list on Thinkorswim, which is 561 stocks. So those pretty much are the most relevant stocks of anything on the U.S. stock exchange. Okay, because if they have weeklies, they're fairly relevant. You're not dealing with the junk stocks. You're dealing with the ones that are really matter. Okay. So of the 561 stocks in the S&P 500 or of the New York Stock Exchange, because that includes Nasdaq, everything, Russell. Okay, 430 are below their monthly pivot as of Friday close. Okay, so you're basically saying 2/3 of all stocks that you know that are relevant to the U.S. markets are bearish on versus their monthly pivot going into the weekend session. And I think this, more than anything, justifies why the cumulative ticks were just continuing. There was no bidders coming in because this is a reality check. Because I mean, you're on the bearish side of trend on a monthly time frame. Okay, so keep that one on watch. Okay, then also I've got a scan using the same 561 stocks on your weeklies, but I'm looking at a quarter basis. Okay, so basically, of 561 stocks, for over 315 of them now are below the quarter pivot. Okay, so for the past quarter, now we've got more than half the stocks relevant to the U.S. stock exchange that have turned bearish on the quarter. Okay, so there is a lot of people just looking at charts don't realize what's happening under the hood, but our breath is just it's flashing big time red flag that this market's in trouble. Okay, and you don't really see it until you see the scans that I'm currently showing right here, and you can't pay me at $10,000 to take a long position right now. If we pop Monday morning, then I'm going to be looking for shorts. Okay, until proven otherwise. But these two scans alone suggest to me that there is some major problems hitting us under the hood, and it's going to take a major influx of capital into this market to turn this to right this ship, in my opinion. Okay. Okay, to finish the video out here, I'm going to go through my 15 most important stocks, in my opinion, currently on the stock exchange. Okay, these are your mega caps. Okay, and some of the some indice ETFs as well. So I'm starting with IWM. Okay, so basically, of course, we're below our quarterly pivot on IWM, so we are relatively bearish. This was the left shoulder. This was the head. It looks like we failed the head, and we're coming down into support range. Obviously, 207.84 is likely target where we're headed. So obviously, this is bearish. Looks like we're trending lower on our NASDAQ. SPY. Let's check that out real quick. On your quarterly pivot, still below us on that one. So we do have that going on here. We do have a potential left shoulder, head, and we're right fighting this neck. Technically we have, but we haven't broken the neckline yet. Okay, so in my opinion, you see this prior pivot right here. That would validate that would be validating the breakdown of the head and shoulders, in my opinion, at the very least. Okay, so 447 area. If we start breaking 447 on SPY, then that's going to validate a head and shoulders breakdown pattern for a revisit. This is a primary trend line down here to revisit this primary trend line. I think that's where we're going this week. You just have to be strategic about entering on your trades here. So something I'm looking at here on that one. And then on your market webs, like I said, similar situation. We've had a break. It's not a confirmed end of the world scenario yet. We do have above average volume hitting the past several days here. Could this all disappear? I don't know. This I can take that off, remove. But and we remove that too. So, but at any rate, that's why I'm looking at here on these right here on SPY, American Airlines. Everything going on with COVID. They're saying that we're having something like what was that? I think it's 100,000 cases of COVID a day, but the mainstream media is really not picking up on it. So I just found out that my nephew just tested positive for COVID tonight. So it's still very rampant. He might have the Delta. He might end up having an Omicron. I don't know. You just don't know for sure. But they say 99.9% of the people are getting the Delta variant with this virus now. So we'll see what happens on that. But to even remotely complete the pattern here on American Airlines, you're still considerably lower. You have $15, and it just looks horrible for these travel and leisure stocks. If anything, things have gotten worse over the weekend based on the news, what's coming out about this. virus and outbreak and everything like that. So another situation here: left shoulder, potential head. Potential. Look what we've been doing. We've had these potential heads before, and they resolve higher. This right here looked like a really potential head, but they saved it on the quarter. On the quarter close. So this here really looks like a potential, very strong potential head and shoulders because you have your quarter close right here. Okay, so that's what I would really be targeting here on the Qs to come down to the quarter close and validate this. This really looks like what big money is trying to do to me. We're going to be having a move in the next couple week or so, back down to the 357. It's not that hard to do that in a day, so keep that in mind. Goldman Sachs, we're hovering right here at the quarter pivot. It's doing better than most. If you think the markets are going to rally, I would think the financials would be one of the first ones out of the gate going higher. So, that's something I'll have on Watch Monday. See if these financials are going to start leading us higher again. Because that's what I think we really need to see before some of this fear comes out of this market. See these financials start catching a higher bid. So, and then once Powell came out and said he's throwing out the transitory verbiage on the whole inflation theme, that's whenever the markets, we started accelerating the breakage in these markets. So just remember, now the inflation fear is starting to manifest itself in this market, in my opinion. Okay, so JP Morgan, this is the weakest of the major banks, in my opinion. We have broken the quarter. This, if it's a leading indicator, it has been a leading indicator. If this is our leading indicator, the banks are preparing to make a much larger move lower, possibly come all the way down here to their channel lows, in my opinion. That's what I'm seeing with JP Morgan. Microsoft, we have the CEO sold half his shares. Look how fast this is one of those stocks since earnings has just rocket shipped to the moon. So keep this one on watch. We're at quarterly R2 on that one. Quarterly R2 support at this point. So this thing has rocketed shipped. And since this quarter, just this quarter, okay, that's September, close of September, we went from 285 all the way up here to 322. So plenty of room to come down and disappoint. We just come back down to the quarter close. Guess what? There's a left shoulder, head, potential, starting to right. If we were to do something like that, come back down to that quarter on Microsoft. Google, okay? Similar situation, Google's been holding out better. It's one of the few stocks holding out the best of the megatechs. So it's been trading in a lot tighter ranges and stuff. It hasn't been nearly as wild. Okay, so if I had to be in a megatech, that it's performing better than most, and it just really doesn't tend to get too much news on Google lately. So that's one I wouldn't be looking to go short too fast on that one. Keeping a close eye on Taiwan Semiconductor here. We've just been channeling sideways for a long time on that one. We are above our quarter pivot though, so we'll keep an close eye on that one. Netflix. They finally capitulated on Netflix. Finally, I didn't know if this thing was ever going to come back in. So yeah, we're finally getting a capitulation on our Netflix here. So we've broken into this sideways channel. Obviously, we have a virgin point of control below us, so I don't see any support. And we have the quarter pivot all nearing the same area. So I truly think you'll see it first of the week here sometime, the 580 area here in the not so distant future for Netflix. Okay. Micron's been on a tear this quarter. Okay. So our quarter closes right here. And so we did a quarter R2 and then it got rejected. So we're already down to quarter R1. So we'll keep a really close eye on this one as well. This could be a support. You never know. There is okay, I don't have on the daily, there's not any virgin point of controls, but there might be on the shorter time frames. If you go on a 30-minute here, could be there's a virgin point of control to the upside. Never tested on Micron. And there's one down here. $53. You have to go all the way $53 to get one on the daily time frame. It's not really worth that to be looking at that. Micron, Amazon's one of the one. Some these are leading. This is tech leading to the downside. Okay, so we did break the quarter pivot as of Friday again. So keep this one on watch here. Looking really bearish. So I want to keep this one on watch as well. Obviously, since we broke the quarter pivot, now you have to target the 3,200 again to the downside. So that would be breaking the quarter close once again, assuming this pattern continues to hold out. Facebook is another one really performing very bad. This one really looks like a Head and Shoulders to me. This kind of looks like a shoulder right here. Kind of looks like a shoulder right here. A head. It looks like we possibly are breaking down on a Head and Shoulders pattern. It could be a little bit longer time frame if you want to look it out here. But if I'm right, this is the Head and Shoulders breakdown. You know, you have to target down here near this pattern lows, which is a virgin point of control down here. It all makes sense. You would be targeting the 260 area for a massive, real quick, possible, fairly quick move to the downside on 260 on that one. Boeing's getting hit really hard with all this travel and leisure. It did come down to 185. They are trying to hold it at this price point, so keep that one on watch. AMD might be starting a Head and Shoulders pattern. This thing has been on an absolute tear since earnings. We went from the quarter pivot, blew past QR2, and now we're seeing if we can come back in and hold lower prices on that one. Nvidia, they were buying out one of their big chief competitors. All regulars came in here, foreign and domestic. Nobody wants them to do it, so obviously it's probably going to take some. It's probably going to come back in because of them not being able to buy them out. But we do have a QR3 scenario for Nvidia. This thing here has just went through the roof, and so this is the most extreme read that I'm seeing on a quarterly time frame. And so this one here, we're going to really keep a close eye on seeing if that is going to start leading us to the downside as profit taking starts ensuing in that. So we do have had a strong reading despite bad news out of Apple. Obviously, they're saying dwindling demand for their new products last week, as supply chain disruptions and the pricing. So if that's the case, they're selling a lot more of the lower priced older models possibly, and so obviously might be having a less profitable quarter than otherwise anticipated. So keep that one on watch also, as possibly coming back in here. This is your primary trend. We are outside that primary trend right now, the 161. We would want to think we could come back in, and retest the bottom of our trend. You would think. So just keep this one on watch, or if you look at it from this standpoint, at the very least, come back and do like we did before, do a retest down in this area, the 150 area, here in the not so distant future. I'd be a $10 lower on that. Moderna, I got that one on there because it's such a high profile stock right now with everything going on. We're below the quarter pivot in the face of another big pandemic outbreak potentially here. Lot of profit taking in this name, as nobody knows for sure if they can come up with a confirmed alternative to the vaccine. We got Merck coming out with a pill that's going to be a booster pill for COVID. So if they get that on the market, that's going to eliminate the need for these really costly vaccine alternatives, because Moderna is an extremely costly, is not a cost-effective way to administer the vaccine. And whenever they do start cutting back on giving out these vaccines, Moderna is going to be one of the first ones, because you have like a negative 80 degrees Fahrenheit or something, like extreme cold conditions. You have to have an extreme freezer just to maintain the vaccine, and where the Pfizer vaccine doesn't really need can just use a conventional freezer. Okay, and so this thing right here, there's a lot of trouble in this, and plus you have the distribution issues too. You have to pack it in dry ice and all kinds of stuff like that. Where Pfizer, you don't have to do all that. Okay, Tesla, and then Tesla looks like it's ready to puke. So you look at this. Here's your quarterly pivot on Tesla. We are at QR3 on Tesla as well. Okay, so you got Nvidia and Tesla. Those are the two big problem childs in my opinion. And I also want to point out, if you're talking about XLY, and if I put the XLY up right now, the two chief holdings for XLY, that's Tesla and Amazon, and both of them, are such a huge weighting here. So, we really Tesla. Some bad news on Tesla could really break the back of this market. So I just want to float that idea here. We had some really nice tight consolidation going on here on our XLY. Okay, building a fairly, not too bad, but we still had it was going up so fast going into this Christmas holiday season. On a monthly time frame, we've got all these virgin point of controls that have never been taken out, way at lower prices here on this XLY. This is a major, major red flag to me. The fact that consumer discretionary just rocket ship going into Christmas, thinking, oh my good, we're going to have this wonderful Christmas. Well, guess what? How much of that's already priced in? That's what I'm thinking. And you got this huge exposure to Tesla and huge exposure to Amazon, and and a very, very poor monthly volume profile in my opinion. And if you take that down on a weekly time frame, you probably got some virgin point controls on that one too. Yeah, we just took out a virgin point of control. We look at all on a weekly time frame. Look at all these virgin point of controls on this consumer discretionary. So this is looking bad on multiple time frames. That consumer spending may have already been fully priced in for this holiday season. So I don't know if they're going to bring it in before we start having the earnings coming out in January, but this is a major blinking red flag to me that we have to think about. Okay, so hope you enjoyed the video. Like the video if you like it. I'm not going to post it everywhere, but please leave comments below. I just wanted to give you these kind of ideas that's floating in my head. Like I'm a true believer in volume profile, especially when we've already got prior volume profile that we can trade against. Okay, it's really hard with volume profile whenever you're making all-time new highs every week. Okay, but now that we're coming back in, I think this volume profile is far more relevant. Okay, thanks a lot, guys.